Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Hey, long time no see. I've had visitors the last 3 weekends of mine, and we're working on buying that house. So I haven't had as much time to devote to extracurricular projects. But I want to tell you, ULTY's gonna reverse split. Like, I think that is inevitable. It was down under $5. It won't be long till it's under $5 permanently. There's a lot of institutional investors who have internal policies not to buy stocks or ETFs that are under $5. A lot of those are considered penny stocks. And in order to reduce risk, they have these policies that they won't purchase them. In order to attract institutional investors, I do believe that YieldMax will do a reverse split on ULTY. Will that impact us as holders of ULTY? I don't think it will. If it were a stock, a reverse split would just be the death knell. That's because a reverse split typically happens when it's already in a spiral downwards. Now, this particular ETF is not performing well. It has been going down and will continue to go down. There's no way that they're going to make the kind of income that they need in order to get it to go up and still pay out the distribution that they're paying. Now, I have contended for quite a while now that as long as you have a total return that is positive, it really doesn't matter how low the stock price of this ETF goes, of ULTY goes. But it has not been doing that either. I go back and forth between being slightly in the green and slightly in the red, and I've been holding it for a few months now. What we have to, some people will say, hey, it's been this price before and it rebounded and it ran all the way up to $6.50 or close to $6.50, $6.45-ish. And so they think it can happen again. What you need to understand is that we are on the verge. Now, it's not necessarily going to happen, but we are on the verge of a crash. We don't know for sure that's going to happen. The Fed is going to have many more rate cuts, probably 3 more this year. They're probably going to start up quantitative easing again because they just cannot leave things alone. They can't let the market be a free market. That's been the problem with the last 15 years. You cannot make an informed, rational decision. You can't look at valuations. You can't look at what a good company is or what it isn't. You can't make any intelligent decisions because the Fed will just come and rug pull any kind of logic that you have. And so that's cost a lot of intelligent people, a lot of opportunity, a lot of money. And it's made a lot of people that take outsized risk a lot of money. And that's what it does for companies too. If you don't take advantage of it, you're left holding the bag. But because the Fed is the buyer of last resort, and it has been propping up the market for the last 15 plus years, they can pull the rug out from underneath us at any time. So it's a huge risk, but it's also risk not to be involved because they just won't leave things alone and they're inflating our currency away. So when you sit in cash, you're a guaranteed loser under this type of management, of money management. But ULTY will go down below $5 in my opinion. It'll stay there. Last time it was this low and then it shot up, there was a variety of factors. They had just changed their strategy. And in addition to that, it had been the tariff talks that crashed the market short term, and it was a V-shaped recovery. Okay, we are probably not going to shoot up as fast as that V-shaped recovery did, which pulled the entire market along with it. Now, is it possible that ULTY goes up back up to $6.50? Yes, of course it's possible. Anything's possible. But if was a fifth, we'd all be drunk, right? Like, it's probably not going to happen. What would have to happen is they would have to have a string of really good luck in the stocks that they have, basically going up for several weeks in a row. Because obviously the upside potential is capped by the covered calls that they're selling. They're spending a lot of the income that they have buying protective puts. So that's eating into the profit that their fund is making in order to pay out the huge distribution that they like to advertise. So I do not think it's going to happen. Obviously, I hope it does. I'm still a holder. I don't think that a reverse split would help it go up. I don't necessarily think it's going to make it go down. If it'll just be a dollar for dollar trade as far as we're concerned. If they come and give us 1 share for every 10 shares that we own or something like that, everything will just be multiplied by 10, except for your share count will be divided by 10. But the price will be multiplied by 10. The distribution rate will be, the distribution itself will be multiplied by 10. And your shares will just be divided by 10. And because it is an open-end fund and they can create or destroy shares in order to fulfill market obligations, I don't think that it would necessarily mean that it was going to go down any faster than it has been in the recent months. So I am stocking up on QQQI. I've told you before that I like that fund. I'm buying into it. I just started a position in KQQQ, which is a curve fund, and they have about an 18% distribution rate. I'm going to build my WPay size. I'm going to build onto that size, so I'm going to get more shares of that. I still have my GDXY. I have some SLJY, but I've appreciated the GDXY more. It's been performing better, so I probably will add to that position. But you have to understand, curve with an 18% distribution, if it stays at a relatively stable NAV, is still way better than ULTY with an 80 or 90 or 100% distribution, meanwhile losing money at the same rate or a faster rate than they are distributing it to their shareholders. So I had a lot of hope for the fund. I've seen a lot of money made with options on higher volatility stocks, which ULTY is doing, but their strategy has not been sound. So even though I was excited about it, and I did actually think that they were going to have distributions that were larger than the amount that they were going to go down in value. And I've told you the whole time, I don't see any way for it to go up long term. A product like this is designed to go down in value because your upside is capped, but your downside isn't capped by, even with the protective puts, you have more downside potential than you do upside. So even if they win 50% of the time and lose 50% of the time on their stock trades, they're still going to steadily go down in value. Now, I was hoping that they were going to be making enough income to more than make up for that. And when I first started buying into it, their trailing 12-month total return was about 17%, which is respectable. So I thought that they were going to have a positive net return, but it hasn't been happening. I don't see any huge catalysts coming from the market, widespread for the market. I had talked to you guys and told you that I thought the government shutdown would hurt the market. It hasn't hurt it as much initially as I thought it would, but there's starting to come out a lot of articles about how if it drags on, every day that it drags on, it's more likely to affect the economy and it's more likely to affect the stock market. You've got, I think it was D.R. Horton is getting sued for making their payments, telling their customers that the payments were going to be lower than they were because they weren't including the actual estimated property taxes. They were including property taxes from before the house was built in the payment. Then when they sell the loan, people's mortgages are going up by $1,000 or $1,200 a month to make up for the shortfall and also make up for the actual property taxes that are going to be paid in the future. So people are getting hurt that way. Jobs keep getting cut. AI keeps growing and getting better. I don't know if you've seen this Sora AI app, but it is insane. It makes videos and it makes good dialogue and they're very realistic a lot of times. So AI is getting better each day, which is also putting jobs at risk. They're lying about how low inflation is, so people can't afford to pay their bills. The Texas State Fair had 400,000 less visitors than it did in previous years. 400,000. If that doesn't tell you that people can't afford to live, I don't know what does. A fair is expensive, but it's not like a vacation, right? It's not like as expensive as a vacation. And so, the travel industry is going to be hurt. If people can't afford to go to the fair, they can't afford to go to Disneyland. They